Well, I think knowing what you own, and I say that because some may be in mutual funds, others may have individual holdings. There may be overlaps. And, I think you have to control in your environment today what you can control.
Hi, I'm Chris Reynolds, and I'm on a mission to help independent financial advisors build a better business through a remarkable client experience. In this podcast, you're going to learn how to do that from my conversations with the visionaries, the leaders, the independent advisors who are reshaping the future of the financial advice industry. At the end of each episode, you're going to walk away with an actionable idea that you can take and use right now, and it will help you to build a better business today. This is Turning the Page. Today, we have a very special guest. We have Pattie Lovett-Reid, who was just at our summit. We were just chatting about that. We just had our summit at the company. Thought it went really well. And I thought this would be a very timely podcast to have you on. You're a commentator. You've been on CTV News. You've been on BNN. I was going through the list of all of the places.
Okay, just stop, Chris.
I'm just going to say every Canadian media has had you on there talking about, and they even have you as financial guru, which I love, but a commentator and really keeping time. And what's best, and our audience will love this, you were an advisor yourself.
Mm-hmm. I was.
For a time being. So, it's a weird market out there. Lots has happened this year. You have, the environment. Maybe, tell us a little bit about your story and what's going on and what we're going to talk about today.
Yeah, I have been around for decades, literally. So we have certainly seen this sort of market before. There's no question about it. When I look at what's going on, there has been nowhere to hide for investors. Absolutely nowhere. Bonds have had their worst showing going back to the Second World War. The volatility in the markets. We've watched the price of oil and the knock-on effect from OPEC and OPEC plus. Inflation, 7%, has not ticked lower yet. The housing market has definitely pulled back. I'm telling you what you already know, but I'm also telling you what you already know in that we have been through it before. And one of the things I like to think about and to put some context around, because I have been around for so long, is that, if you had put $10,000 in the S&P TSX in December 1991 and left it there right through until December 31st, 2021. And there have been lots of ups and downs. There have been lots of pullbacks in the market, but you left that $10,000 constant, you have over $60,000. If you miss just 1% of the best trading sessions because you're trying to time the market, that number is closer to $3,700. So the point I'm trying to make, and I try to say it to people all the time, if you have good quality investments, you have a longer term horizon. You may not have 30 years, but my typical time horizon is at least a 5-year time horizon. Right. Then you've got time on your side. It's not timing this market. I just don't believe in it.
I am with you, Pattie. And again, been around. Also, I've seen the ups, seen the downs, been through recessions. And your advice is what we say over and over and over again. Yeah. And yet we also see, and you see it, I see it, the same mistakes being made every time it happens. Yeah. Every time we have a boom market, we see the same mistakes. And every time we see a down market, people question short-term movements and they figure that that's going to be a long-term movement. And you actually categorized it and put together some of the mistakes that people made. So maybe we could talk about some of those mistakes and why people make them.
Well, okay, the obvious one is sitting in cash. And I'm not suggesting that cash isn't king right now, because it probably is. I can tell you that we've not changed our portfolio composition at all. I'm very comfortable with it. Does that mean I've committed more money to this market? Not necessarily, but that doesn't mean that I won't. And when I do decide to do it, I'll do it on a gradual basis. I'll, go in on regular amounts at preset periods, take the guesswork out of it. But I know people who are paralyzed with fear and they're thinking, okay, the best move is for me to move to cash, or I'll just leave it there. But still, after taxes and the rate of inflation, you are losing money. So cash may be king right now, but the quickest thing that'll destroy your financial plan, in my opinion, is probably procrastination. And Chris, I think you might agree with me. I probably wouldn't go back into the market until I see some inflation coming down, the relentless growing of the US dollar strengthening. I'd like to see that pull back. Interest rates, they will normalize. They're not going to go up forever, maybe around the 4% plus or minus here in Canada. And so get your money working for you.
Yeah, no, I couldn't agree more. And the other challenge with cash is just that, is what are the signals to go back in? It's one thing to say, okay, I'm going to move my money in cash and wait, but what exactly are we waiting for? To your point, there are, a lot of signals that you could look for. But at the end of the day, if you have solid companies you're buying at, reasonable prices, and you plan to hold them over a long period of time, you're going to do okay. So what are some of the other things? Well, not probably. I think stats are on our side, that we always do okay. The patient investor is always the one who wins in the long run. But what are some of the other things that people do that, you're certainly seeing right now, and you would say, wow, that's something you should not do?
Fall in love with your assets. You know what? Fall in love with another person, but don't fall in love with the stuff that you own. That goes for your real estate too. Chris, I can tell you at one point in my life, way back when, we had a house that was simply too much for us. Yes, we could afford the mortgage payments, but all of a sudden, we'd wake up and go, well, we can't do this. We can't do that. We had 4 children at home. We wanted to put them through post-secondary education. And we thought, you know what? It may be time to move. That was my dream home. But
it was your dream home.
It was my dream home. We've moved on. I bring my husband frequently, but as you can tell, I haven't totally moved on from it. But no one buys into an investment where they think it's going to go down, unless they're a different type of investor than we're talking about here. And so they hang on and they hang on and they hang on. And so I just think that, there are opportunity costs. If you've got a dog in your portfolio, talk about it, address it, move on.
Right. And I've seen the same thing myself, where they hold and they hold. And the best discipline that I've ever seen, and you probably agree, is you have not only a buy price, but there's a sell price. There's a time where things, hit the valuation that it's going to be hard to exceed that valuation. Or on the other side, the fundamentals of a business have changed. The market turns their back on that asset, and it's going to be quite a while. So where there's other opportunities to be had. So, yeah.
No question about it.
That's a great lesson. So that's great. And what other things are we seeing right now?
Well, here's the thing, and I know that is primarily advisors that are listening to us, but I don't think clients or anyone should abdicate responsibility for their financial future to anyone, whether it's a partner, whether it's an advisor, because here's the reason. No one cares more about you and your financial future than you.
Yeah.
And so you need to have a stake in it. You need to be involved. That doesn't mean you have to manage it. We've got people that can manage it. I'm in the markets every single day. I am talking to people every day, and I do not manage our household portfolio. We have someone else doing it.
Right.
I'm probably not the best customer. They probably don't like me the most, but set up regular meetings. We just had our annual review. We are a little overexposed right now to equities, and that has a lot to do with our primary positions where my husband and I came from, because we worked in the company, we had shares in the company,
right.
We had pensions in the company, and I'm going, no. We got to move on from this. We got to spread this out a bit. And so, it's a matter of being involved. It doesn't mean you have to do the work, but you have to know where you stand.
I agree. And also, as an advisor, and to your point, talking to advisors, the best advisors I know are usually the best teachers as well. So it's not just about keeping an eye on it, but they take the time to really educate their clients on what they have, why they have it, what the methodology is to get to the next decision point. And are great communicators as well. Like the best advisors I know are the ones who not only stay in touch with their clients on a regular basis, but also feed them a lot of information, whether it's directly to who's managing the money, whether it's what's going on. Now with this type of medium that we have, advisors can really utilize it to send that message out to clients on a regular basis. The more you can educate, the more you can communicate, I find.
And it's a better
just
relationship.
better for everyone.
It's a better relationship for everyone. So in part of that communication, one of the things that I think we could still be talking more about is the impact of how much money you actually put in your wallet. So you made reference to the fact that in the last year, I've become freelance by choice. I loved being the chief financial commentator at CTV. I can't tell you. I mean, it was a great, great job. 3 o'clock in the morning, Chris, not fun.
Not so
I
good.
was pretty tired. That was about a decade. So, I get these opportunities coming my way, and they are not in after-tax dollars. So I fall prey to what other people do and say, well, this is how much money I have coming in. Now, I have set up the right account to make sure the taxes are paid, quarterly installments. I'm making sure that I don't fall behind the 8 ball here. But the lack of appreciation for, taxes, inflation. And the other thing I would even add to that is the power of time and compounding, and how that can really work for you when you are saving, when you are investing, and it can destroy you if you owe money. And people need to just understand that. So look at the money that you're actually putting in your pocket.
Right. And then people forget about it. And certainly here in Canada, they take more than their fair share.
Oh,
So,
let's not even go there. That's a whole, we're going to talk that one
I was
another.
going to say we could do a whole episode just on my rant on that particular topic. But that being said, it is true. And we have ran into situations where people forgot about that whole big tax bill. And then the year comes around and, that's not a pleasant conversation to be having.
I can tell you a true story. Our son, Dave, I got to always refer to Dave because he gives me the best material. I'm driving on the 401 and I get a call into the car, into my speaker. Mom, I have the worst news ever. Now I'm in the middle lane going at a fair clip, and you get a call from your son who says he's got the worst news ever. And I'm like holding my breath, and Dave, I'm on the 401. Like, can you give me a minute? And he goes, no, I have to talk about this. And so I said, all right, as I'm trying to get over, because I'm pretty sure I'm going to have to go on the side of the road. And he says to me, I have a tax bill of $1,800 and I want to know how you let this happen.
Yeah, Mom.
I just started to speed up and went, are you kidding me right now? As any parent who is listening, that is not the worst news you could get from a son in his early 20s. But what you also know is that it's his problem. Right. Now, and it was his problem. And we talked about it, and I helped him figure out, don't look to me for the money. That's your tax bill, not mine. And how are we going to set you up for success going forward? I can tell you, he's been all over it ever since. It has to be a life lesson. I mean, the government, whether we like it or not, and I agree, taxes are high. They're a financial partner for life, so to speak. Right.
And it has to be taken into account with every decision that you make. Again, especially in Canada. And so to your point, that is the individual's responsibility. Plus, to your point, it's also a good life lesson, because once you've ever had that happen to you, you'll never let it happen again.
Here's another one that I'll throw out there for you: relying on memory. Even paying those tax bills, you forget to do it, and all of a sudden you realize you have an interest charge, which is just basically a sinkhole. Like, why would you, especially if you're sitting on the money, or if you decide you want to go in to the market and you think, okay, I got to remember to do this on the first. No, there's a book that I've read. I'm sure everyone here has read it, but I do like it. The Automatic Millionaire by David Bach. Yes. There is nothing automatic about becoming a millionaire, but you can set yourself up for success with a millionaire mentality. Automate as much of your financial life as you can.
Yeah. Well, as somebody who seems the memory is fading every year that goes by, I think that is a very important thing. What are some of the other things people should be looking at? What are the big lessons going on right now?
Well, I think knowing what you own, and I say that because some may be in mutual funds, others may have individual holdings. There may be overlaps. And, I think you have to control in your environment today what you can control. Right. You cannot control inflation. No matter how much you buy and you're contributing to it because you're paying the higher prices, it's not going to tip the scale. But what you can control is your portfolio composition, the amount of risk you're prepared to take on. You can understand what is in it. You can control the news that you listen to, the media outlet, because if all you're listening to or all you're reading is negativity, it becomes a self-fulfilling prophecy. And so I think you got to sort of stand back and say, okay, what am I paying attention to? So knowing what you own. The other one is, in this environment, saving until it hurts. I say that because, none of us know how long we really have.
No.
And I was at my mother-in-law's funeral in my 40s. And one of her former colleagues, came up to me and said, Pattie, are you open to some advice? And I said, I am. Sure. And she said, your golden years are right now. And I kind of looked at her, I said, but I'm in my 40s.
Yeah.
And she said, yeah, but don't save. You don't want to die the richest person in the graveyard. And so quit, don't spend until it hurts. Don't save as if there's no tomorrow, but find a balance and live your life. And if you know what you own and you have that financial wiggle room, I think we can go a long way, even in an environment where, are we headed for a recession? Maybe by the second half of next year. But that doesn't mean that those who can afford to spend won't continue to spend. Those who can't, we know they're going to be struggling just that much more, but it's about finding that balance there.
I agree on both points. One of the things that I certainly advocate is know what you own but why you own it.
And why?
Your point is everything has a purpose within a portfolio. Sometimes it's risk mitigation and it's sometimes doing its job. Sometimes it's for growth. And again, is it doing its job? And people sometimes forget what purpose each one of these holdings would have within their portfolio, as well as what they have. But again, the why. And sometimes the why, I'm going to say, runs out, that it all of a sudden is not doing what you thought it was going to do. It's not mitigating risk. And we talked a little bit about bonds, for example, where, people went into them thinking it was risk-free until interest rates went up a couple percent. And then there are people who are like, what? You can actually have negative numbers here.
The good news on bond markets, though, when I look at it, the downturn is relatively short-lived.
Yeah.
Relatively, but yes, absolutely. Here's something else I want to throw out. Ignoring what you're worth. My husband and I, once a year, we sit down between Christmas and New Year's, to be honest with you. And that's when we do our net worth statement. Now, we've been married 27 years and coming up to 28 years. And we have the very first one we ever did.
Wow.
And we've kept them in a file because what it does, and a net worth, obviously everyone here knows what it is, but by listing down what we owned, what we owed, it allowed us to, see where we wanted to establish our financial goals for the next year. Sometimes it was paying less in taxes. Other times it was paying off the mortgage. Other times it was putting money into the education fund. You get where I'm going. Those goals always changed, but we always had a financial plan, and it was maybe a back of an envelope financial plan, but we got aligned together. And the reason I say that is it sounds sort of pedestrian, do a net worth statement, but I've watched it and I've watched how it has formulated our goals, and we shared it with our family. We shared it with the kids. And that was an interesting lesson for them. We also realized that we were worth more than we thought we were with fair market valuations, and our wealth would be accumulating. And I thought that was important because the next element of that, through COVID, one of the things that we decided to do, rather than be demonstrative on a external basis, here's what we're doing, here's how we're giving back. We chose a small business owner, and we went out of our way to say, how can we help? What can we do to get you through the next 3 months, the next 6 months? How can we help your children with their education? Like things like that. Now, the reason I say that is because it's all about a legacy too, that I think every one of us can do things and see things differently. But we shared that with our children as well. and they could say that is taking out of our inheritance.
Yeah, wait a minute. Yeah.
And I think one of them, Dave, probably thought that, but no. But what happened was they were happy about it. They were thrilled, and they also said, "Well, how can we help? What can we do?"
Nice.
And a legacy isn't only about the financial assets that you're leaving behind, but it's also about the education, and it's about legacy can mean so many things. And so sometimes I think that gets lost when we're only talking numbers.
Again, both points. What gets measured gets done, as they say. And, that whole balance sheet, net worth statement is crucial, because that's the measurement of whether you're progressing or going the other direction. And to your point, it's not necessarily just in the investment world. Is your real estate going up? Are you paying down debt? Reorganizing things in a very thoughtful way. And, I love that piece of advice. And the other piece of advice is that legacy. Leaving that legacy, and a legacy is not just money. And I love your point. It's not just money, it's education. And I know that my grandmother left me, the wisest words I've heard, which is the one thing that no one can take from you is education. So make sure that you get a good education and read constantly, because that's the one thing that no one can ever steal from you.
Chris, that's a great equalizer out there. It really is, and I would throw out one other comment. We have 5 grandchildren. The 6th is on their way.
Oh, wow.
5 boys, another one. It's a girl, at least we think it is so far. Who knows? Something could happen. Something could change. But here's the thing. Our grandchildren do not need another designer outfit, another toy, another. What they need is time with us. What they need with us are experiences with us. What they need from us is an education. And so I wrote a blog on this, and I often write blogs and post them on my Instagram. Spoiler alert, guys, here's your gift for the next 20 years. This is what you're getting for birthdays and Christmas. Okay, I'm not that bad for people listening. There's a little something there. But the focal point for us really is an education. And I say that because many people know I did not go on to a post-secondary education. I was done high school in grade 12, and I'm pretty sure I dropped math in grade 9. So I don't know. I wonder what I could have done if I'd gone on. But, but I do. So it's been a non-negotiable in our household.
I think, and we certainly agree with that. As I said, there's one thing that I would always support anyone in, and that's education. So, no, it's great. So, Pattie, thank you very much for being with us today. Any final words? And how do people follow you, like Instagram?
Primarily, that's where I am. I'm on LinkedIn as well as Twitter as well. It's all under Pattie Lovett-Reid. Oh, that's perfect. All right, Pattie, thank you so much. And, in summary, I usually do the rant. There's so much to rant about in this particular episode, because as I said, we agree on so many levels. But I think for the financial planners who are listening out there and dealing with their clients, it is a scary time. It is for them. This might be their first time, or that might be their 10th time, but that doesn't make it any less scary. And one of the things that I think that we certainly advocate is communication. How can you communicate to your clients, whether it's one-on-one, whether it's in formats like this, whether it's client nights? Just attended one just recently. But, my rant is the greatest relationships are usually based around lots of communication on both sides, both clients communicating back and you communicating to clients. And Pattie, I think you're a big advocate of this, and you've done a lot for the industry by promoting this to individual clients and the value that advisors bring to them. Oh, huge value. So thank you for having me. Thank you. Thanks for joining me on Turning the Page. What did you learn from today's episode? If you follow me on LinkedIn, please drop me a comment there. I'd love to chat with you about it over a virtual coffee. Send me a message on LinkedIn, or you can do so at our website. The link's in the show notes. I'm Chris Reynolds, and until next time.